Hey everybody, hey traders, Chris Pulver here. It's just after 1 o'clock on the 20th of December. Want to send an all-market outlook for Flex Trading Room, Equities on Demand, and just kind of update everyone on everything for where we're at with currency, stocks, options, things like that, and see what's going on for the week. So this is the last full week of trading before we hit the holidays. We'll have holiday disruptions the 25th and 1st. So I would not expect to see anything that's crazy dramatic in the markets over the next week or two. Obviously, we're going into the end of the year on the 29th, so if there's any type of big last-minute pushes, holiday drifts, I would expect the markets to remain pretty green, pretty drifty into the end of the year. You take a look at the S&P, we're at 475. The all-time highs have yet to be breached. If you go to the DIA, they were breached not that long ago. These are the all-time highs here in January of 2022. They were breached that looks like the 13th of December on a big day, daily push right there. The NASDAQ took a little bit longer. Here are the all-time highs. We just closed above that. This would have been a couple of days ago. Let me see where that level was. So right there are the highs, and you're talking about maybe within the last 1 or 2 days, we breached the all-time highs. Now, one thing I'm noticing, let me go back to this chart here. Let's go to the daily time frame and let's talk SPY, Qs, DIA. So S&P 500, one indicator that I watch and rely on quite heavily. You can see it right here when the market called a bit of a top. That was divergence plus overbought conditions. We're getting the same lineup once again on the daily time frame. If we go to the subgraphs, this is my overbought condition with the relative strength. This is my divergence where momentum is not making higher highs, but price is. If we go into the weekly time frame, the weekly time frame is not quite at overbought conditions, but we do notice that the recent high from momentum and the higher high in price does not agree with momentum. Therefore, again, on the weekly time frame, we do have some divergence at these highs. Doesn't mean I'm looking to short necessarily. It just means that I think a pullback is technically overdue. And I think that the timing of this might be the very end of the year, like the very last minute. There might be some heavy profit taking going into the end of the year. I don't know how big of a downturn that would create. If it's just more profit taking, we could have maybe a dip of some sort. I would expect to be something along these lines technically. Wherever this high is put in, look for pullbacks and dips that line up with some type of Fibonacci retracement. Obviously, we're looking left on the chart. This is the SPY. This is the yearly high for 2023 that just got broken. So if we go up a little bit higher, pull back to these recent highs from the year, and then we have another launching pad from there to breach all-time highs, I could see that taking place on a lot of these major ETFs. So U.S. market, I still think has some upside potential, at least until the Fed starts to cut rates, because that's really what's being priced into the market now. Is the Fed has turned, or at least the market's interpretation of the Fed is turning more dovish, as the rate decrease is expected to come in by May of next year, or I'm sorry, March of next year. So if we go to the Fed Watch tool, we have seen this change, and this is still subject to change. This isn't always spot on going into the rate decision, but this has been accurate since, I want to say 2009. Every time it's gone to the actual FOMC day, this has been spot on accurate, but there are a lot of movements and changes right up to the very, final minutes of the FOMC. So long story short, the markets were anticipating higher for longer going into 2024. Now we're looking out to June of next year with rates that are possibly down about 0.75% to 1%. You go into May, sitting here at 0.5% to 4.75% with the highest probability, and going into March, this is where the rate cut is expected to hit. Now, this would be a pause. So if we pause right here, 21% probability that there's going to be a pause going into March of next year. That has increased quite a bit to the cut side. So this was about 45% here, 45% here. And I think, it's interesting now that even you see a small sliver there that's going to be a deeper cut, like a 50 basis points cut, but I don't think that's going to be in the Fed's best interest. They'll still continue to be data dependent as we finish out the official year, get into Q1. What's the inflation telling us? What's personal consumption? What's PPI? CPI, all that data that the U.S. is clearly watching. What are the job numbers giving us? What's the labor market looking like? All these things are factored into, if the Fed is going to cut, and then also not just are they going to cut, but how aggressively will they cut to the rest of the year? One thing I think I'm going to continue to watch going into Q1 would be here's March's anticipated rate cut going to December, and the market is anticipating that the Fed from a 5.25 to 5.5% current rate, the market's looking at, let me bring my calculator up here. If the market's looking at 5.5 on the high side and a 4% on the low side, oops, That should be 150. So the market's looking at a 1.50% cut because you go from 5.5% to the probability of December being at 3.75 to 4%. That is a 150 basis points cut. Again, does that mean restrictive? Does that mean that this is going to help stimulate the economy? Are we going into recession going into Q1, Q2 of next year? I really don't know. I think the Fed has actually gotten what they wanted by not having to do anything other than obviously raise rates really aggressively, all the way up to 5.5%. But then they just talk and talk and talk and talk. But the interesting thing is the markets really sniffed out the Fed coming into this dip here in October, November, and the market has since ripped very aggressively and very one-sided. Now, I do think it's interesting that there could be some more upside potential, but what better spot to find some resistance than getting some overbought conditions here at all-time highs, and then the market looks at, you know what, price to earnings ratios on the NASDAQ or the S&P is a little bit higher than it should be. Maybe there's a bit of a reversion, maybe there's a bit of a correction, and we have this midpoint here. This may not be a broadening pattern, or if it is a broadening pattern, there might be a little bit more upside to go. What I'd like to almost see would be this past high from 2023 becomes a bit of a bounce point. If we're going to make higher highs and break the all-time highs convincingly, I'd like to see a pullback around this previous resistance be a dip opportunity. If this stretches into some fresh highs before we start to turn lower, then I could see a broadening pattern playing out. If it doesn't go too much higher, I'm just looking at this technically. If it doesn't go too much higher, probably just connect the dots. This becomes resistance. This is obviously major support. I would go somewhere back into the middle. If we start seeing recession signs, we start to see the market weakening, heavy amounts of profit taking, then we could see this going, back down into the halfway point. Worst case scenario, I think if we, face a violent recession, then we go to the downside. But I keep bringing traders' attention to this. We talked about this at Market Traders last week in the big give back event that we did with all the analysts. Take a look at, let me see here. This instrument. So this is just some data on U.S. election years, which 2024 will be one, and 83%. So in 23 different elections since 1928, 19 of 23 election years, so 83% of those election years have been positive performance for the S&P 500. The average return is around 11%. Now you can read here, when a Democrat was in office and a new Democrat is elected, the total return for the year averaged 11%. When a Democrat was in office and a Republican was elected, the total return was 12.9%. This is the saying, history doesn't repeat itself, but it often rhymes. This could be that situation for next year. The market just might continue to run, melt up a little bit higher. I think the runway to continue to go green and go bullish right now is going to be the first 3 to 6 months of the year. Because if there's enough gains given, I think that will insulate the markets. Even if we have a slow summer and a contracting Q3, Q4, I think the market still finds a way to finish positive on the year. It may not be 11 or 12% higher, but we might have that run. And then, heck, maybe it runs 20% and then pulls back to be a 10% year. I don't know. That would be a pretty big jump, obviously, to continue to push up without a pullback. So what I'd like to see is, like I said, a pullback would be healthy, and then a run up to actually get some higher highs. Break these all-time highs is great. But I do think going into the end of 2024 into the beginning of 2025, I will probably look to be a little bit more corrective and bearish in the stock market overall. We'll watch the PE ratios really closely on the major indexes and things like that. All right, so that's a lot of stocks I just talked about, but that's my broader outlook. Let's go to the dollar index. So the dollar index is still pushing a little bit lower. I think it has the capacity to go a little bit lower as the stock market possibly just melts up higher. Expect the dollar index to get a little bit weaker. But 101 and 100 on the DXY, I think is good support levels to be looking for confirmation to then buy the dollar back up and look for some strength back to 103.50. This is the halfway point. If the dollar returns all the way back to these highs like we did on this big run, obviously that's a lot of repositioning on the markets where we have a big range on the dollar, but that range looks a little bit more difficult to trade if we see traders that are getting, bear traps in here, bull traps in here. That means that we just have to be mindful of getting into some oversold conditions with some really strong structure, and then the market reverses, comes back to the halfway point. So we were bullish on the dollar in this area. We started to get bearish in the dollar here once we started to have confirmation below 105.50, and that worked out really nicely for us. So we can time this. Technically, we're right now, I'm not super interested in forcing dollar trades, but I will say that if this goes lower, I do expect the stock market and my overall portfolio in stocks and options to continue to be bullish. If that is the case, dollar drops, stocks go higher, great. I'll enjoy that melt up and enjoy the green. And then from here, I'll start locking in profits on my stock positions, trying to trade a little bit more corrective perhaps, and see if the dollar does in fact pull back towards this midpoint around 103.50. All right, so that's a big outlook on the DXY. Let's go to the dollar yen really quickly. I think the dollar yen has been pulling back. We're trading at 143.86. We took some profit at these equal lows last week, which I'm happy that we did. I think the dollar yen just continues to be something we just watch. Keep your short-term alignments handy. This goes for any yen cross. There's good volatility in the pairs, but stick with your alignments. You know, the 1 hour, the 4 hour, the 15, the 30. Keep an eye on what is the predominant trend or the prevailing trend and try to trade in that direction to keep it somewhat simple and straightforward. Trade what you see on the yen crosses, and I'll continue to push that narrative. Aussie New Zealand, a trade that I still like going into next year. We'll talk about more of this in Flex once we get some breaks, either lower or higher. Looking to go with that. My Swiss pairs, let's take a look at the Aussie Swiss and the CAD Swiss and all these others. So for Portfolio Builder and Flex, we'll probably continue to build some buy stop levels to the upside. CAD Swiss is still very choppy at these lows, but I'm looking to see if this one starts to rip back up here, take out this high. Can we work our way back up to equal highs? If we break this level and this becomes support, 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 and we break this high, I'm looking for this to head higher. I've got a big pocket at 71.50 and 72.50 on the CAD Swiss that I'm looking to take profit at. The Euro Swiss, we're going to see if it will hold these lows. The lows right around this 9,400 handle. It hasn't done what I wanted it to do just quite yet, but it's still hanging in there. We have a large trend line like so. And if we hold this level, this goes all the way back, by the way, to the 2022 low, which is right here. So there's major support, major support. I would like to see the Euro Swiss turn here, also break this trend line, and then return back up to 101. If this is a double bottom, measure this move from this low to this high, and then project that move higher. So we talk about 106 to 107 as a profit target on the Euro Swiss. We do have to see price hold this level, and we certainly need to see price get back above 96.50 to 9700 from there, stacking some orders. Maybe taking a chunk of profit here at 1.01 or so, but if we double that move, 105 to 106 ultimate profit target. Pound Swiss still choppy, but looking to stack up some orders to the upside. This one had a pullback, which I'm just going to chill on for right now. Not sure what that is about. What is that guy? Oh, that was strange. Let me undo that. I guess it was just measuring my move here. We saw this flash crash from September, October 2022. I still think this currency pair is a lot of chop. Offers positive swap, but it's a little bit more expensive on the margin side, so we know that in Portfolio Builder I've taken this trade small. I still like the breakouts above 1200 to 1250. We get breakouts there going all the way back up towards 1500 and hopefully breaking these highs and heading up to 1.20. New Zealand Swiss and Aussie Swiss, kind of the same outlook. Looking better than most. I do want to see this break these recent highs though. Just put in a big trend line. We haven't really broken it yet, right? Put in a big trend line right here. We haven't broken it yet. If we do break the trend line, looking for more upside. Okay, 6,000 would be a nice profit target. If we go all the way back up to these recent highs, that's 65 to 6,600. So I'm looking at some wave structure. We start to get a wave 1, 2, 3, 4, 5. Who knows how high that can go, but we'll be watching and projecting profits out as far as we can with some good probabilities. And then dollar Swiss, I'm in New Zealand CAD long as well. Just spot check this one. I like dollar CAD in any dips and pullbacks. Trying to take this all the way back to 87, 8800. New Zealand Swiss we just did. Dollar Swiss is coming back into lows. A couple of things here. We could breach this low. And have this be a trend line. That's kind of ugly there. Maybe a trend line. I don't know. It could be that. Like we break the trend line, maybe we go a little bit lower. If this goes a little bit lower and then pushes up for a bullish pattern, I still like this trade back into this pocket here around 9,500 to 9,600. Positive swap on it. There's two things. Either we go a little bit lower and then reverse with a bigger pattern, or we hold this low, becomes a range trade back up to the highs. If that's a double bottom, then we break and measure that move. So this low right here to the high is going to be somewhere around probably 600 pips. Let me see that right here. So this low is around we'll say 86 to 92. Yeah, so it's about 600 pips, and then you measure another 600 pips the upside for that profit target. So even if we got a trade in here, spot the lows, recognize a bullish pattern, see if we can work our way back up to range highs. That would be target 1. We break and go higher than that. Target 2 on projected symmetry. That'd be dollar Swiss. If it goes a little bit lower, it's no longer double bottom, but if we break and go lower, I'm still looking for a divergence. I'm looking to see if this will slingshot back up here and still find that pocket in the next maybe 6 to 12 months. right? I still like the Swiss pairs that I'm positioned on. Really quick spot check on stocks and options. Everything's green for me today, up about 2%. My account's made a pretty nice comeback this year. My year to date, my 1 month, my 3 month, my 6 month, it's just been rock solid. So it's been a great year. And Equities on Demand, a great year. And Delta Trader as a new service, and we've made some pretty good profits, pretty good credits. Compared to what we paid on some of our positions, which I'm very happy with. So hopefully, students are happy making some money alongside me, and that's the name of the game. Alcoa had a big rip to the upside. Amazon's up above highs. I'm rolling that thing out to 170. Alibaba, Baidu watching closely. BITO is Bitcoin related. Chewy, this is a stock that I'm also interested in with some, if you love your pets, this one's recovering nicely. I'm up for some good profit here. My break even is sitting around low 20s. I have some income plays that I'm looking at for the rest of the year. Right now, the stock is actually up in profit, which is good. I also have a ton of credit spreads. I'm trying to think, the nearest expiration would be the 2750 by 25 out to January. We'll see if this continues to rip to the upside. I could probably just bump this up. I'm going to edit this at 2750 because if we get above that level, protect credit spread profits. On Chewy, we're looking for some upside there. JWN continuing to make higher highs, which is good. CLF is steel related. This one's ripping to the upside nicely. We own this around the $16 area. We've got some good profits there. CLF is starting to rip very, very well. Let's see here. DIA, CTRA, still hanging on some of those trades. Let's see. That is a put and a debit spread. Okay, no big deal. Ford making a nice run recovery. I'll probably let go of Ford if we get back towards this indecision around $14 to $15. That'll be a couple dollars in net profit. FXY, this is a yen-related pair that we have out to March of next year. I want to see if the yen makes a run. If the yen basket gets stronger, then this FXY instrument should make its way back up here. We paid about $2.65 for a $64 call option. And if we get that call option to trade for at least $8 of profit, we're looking at a 3 to 4x return. And my max risk is $265, so $265 to make about $1,500 to $2,000 is a pretty good reward to risk, and we'll see if the dollar yen cooperates in that regard. GBTC is still Bitcoin related. We're going to see what happens next year with the potential approval of any type of spot ETF. Is it going to be GBTC that gets all the love? Are there going to be other official? Does BlackRock launch an ETF? I'm not really sure. We're certainly going to find out though. It could be early January when we figure out what's going on with crypto and Bitcoin. So speaking of, I think the spot price is around 44,000. Yep. So 44,000 back up to recent highs. 48 still this big milestone. Mining costs are sitting right around 42,000 for right now. If we have a dip or a pullback, I'm certainly interested in buying those dips and pullbacks. If we break 48, next stop for me is 68. I think there's enough momentum possibly to stretch above the mining cost by 2x, maybe more. And so that puts us around $80,000 to $100,000. And I think that's a good spot to be considering some next profit levels and just continue to monitor your Bitcoin prices if you have the exposure. If you don't, it's fine. But I've been talking about risk capital on crypto for the last 5 years. And it's kind of exciting at the moment. When we talked about buying in around 17,000, buying again at 20,000, we had a nice breakout above 30,000. Now we're trading at 44. So return-wise, it's one of the best performing assets of the year, outside of possibly Nvidia, but maybe it eclipsed that because for the year so far, we're trading around. Let's go from the recent lows. The recent lows. We're talking 180%. But what's interesting, there's actually been stocks doing better than this. Michael Saylor, big bull maximalist on Bitcoin. MicroStrategy has been buying Bitcoin very publicly for a long time. In this run, a stock, MicroStrategy, is up 340%. A lot of that is due. Look at how similar that chart looks to Bitcoin. So companies that are putting Bitcoin on its balance sheet are potentially positioned for the future in a pretty impressive way. Of course, we'll see. But I just think that, I had some MicroStrategy actually on this chart here. I think I have buy more at 150, which I did. Here's MicroStrategy right here. And here you can see my notes. Buy more MSTR $150 or lower. We had lows at 140. So that's a pretty good spot to buy it. I projected also the symmetry off this move. High to low, lower high to lower low, came right down here, targeted those lows, had a double bottom, and off we go to the upside. Like I said, has been way outperforming Bitcoin. That's up 300% versus Bitcoin's 100+%. So, does it mean that I want to buy MicroStrategy now at $5.95? No, it just means that this is a great spot to buy it, trade some options around it, and know that there are companies out there, a handful that are making a big public public display of affection, if you will, for Bitcoin and having Bitcoin on the balance sheet. And MicroStrategy happens to be one of them. Okay, so things get pretty exciting, and especially if there's more, stock money coming in, maybe some fixed income, maybe big custodian money coming into the crypto ETFs. We'll see what that space looks like, but we'll be monitoring this very, very closely. All right, I think that'll about do it. I can spot check the rest of the stuff on my own. We'll have class tomorrow for Flex, class tomorrow for Equities on Demand to finish up the week. So the 21st, 22nd, trading out the week, and then I'm going to be off the 25th through the 5th. I will be spot checking the markets. I'll be setting chart alarms like I always do. I'm always trading during this period. I just want to be taking a little bit of time off. I got a lot of stuff to take care of. I'll be moving, and in the process of moving, also getting a bunch of paperwork around for a couple of new businesses I'm starting up. So all this is good, but we'll be here to wrap up. I hope it's been a great year, great week so far, and we're just seeing a lot of green, seeing a lot of risk appetite, follow the flows. We know how to trade the holidays. You've been with me the last 3-4 years. We kind of know what holiday trading is all about, holiday drifting is all about, and we're seeing it right now. All right, so happy trading, lots of profits. I'll see you tomorrow in class, and let's finish the week strong. All right, take care, bye.